Good afternoon. I would like to call the meeting of the Assembly Committee on Revenue to order. Will the secretary please call the roll?
Assembly members Considine, De Silva, Flanagan, Gallant, Goulding, Gray, Hafen, Wynn, O'Neill, Roth, Chair Backus.
And I am present. Please mark those members present upon arrival. And if members are unable to make it before we hear our two bills on our agenda this afternoon, please mark them absent excused. As deadlines approaching, members are being pulled in all sorts of different directions. So with that, I'd like to welcome everyone here in Carson City to Assembly Committee on Revenue, as well as those appearing in Las Vegas. We do have two bills on our agenda this afternoon. We have Assembly Bill 557 and Assembly Bill 594, and we will go ahead and take those in order. And I believe Department of Taxation is going to be presenting both those bills to us this afternoon. So welcome. Once you get situated, I know we put Assembly Bill, I think it was 557 on our agenda at the last minute. So I wasn't sure if you had an opportunity, but if you do have your PowerPoint, feel free to connect and start when you're ready. So with that, I don't think I formally opened the hearing for Assembly Bill 557. So I will go ahead and do that. And when Department of Tax is ready, we will begin.
Thank you, Madam Chair. Good afternoon, Madam Chair, members of the committee. For the record, my name is Yvonne Navarez-Goodson. I serve as the Chief Deputy Executive Director for the Department of Taxation. I wanted to extend apologies for Director Hughes. We're splitting time today in various committees. So today I will be presenting AB 557, which is a very simple bill that will provide a great return on investment to the state by creating a significant tool for the department to collect tax debts owed to the state. With me today, I have the department's Compliance Deputy Director, Guy Childers, and Tax Program Supervisor 3 for Revenue and Collections, Kathy Fay in Las Vegas, to answer any questions the committee may have related to this bill or collection activities of the department in general. Good. No, I don't need it for this one. Okay. This bill is brought forward to provide the statutory authorization in support of the department's budget request and the legislature's approval for the required software necessary to implement a data matching system with financial institutions in Nevada for the collection of certain tax liabilities owed to the Department of Taxation. This proposed language is identical to the existing law set forth in NRS 353C.240, which authorizes the same data matching systems for the state controller in its efforts to collect other debts owed to the state. Chief Deputy Controller James Smack has graciously offered to attend the hearing in case the committee has questions about the controller statute, which the department is intending to model here. While the state controller has authority to collect most debts in the state, the department retains authority to collect tax debts owed to the state. Notably, the department already has broad statutory authority to collect tax debts to ensure revenue collections for the state and to further ensure that taxpayers are treated equally. The majority of businesses in this state pay their tax obligations timely, and the department's debt collection of those taxpayers which do not pay their taxes timely honors the taxpayer equitability established in the Taxpayer Bill of Rights for those who do so. Under existing law set forth in NRS 360.510, the department often issues demands for assets of a taxpayer from a financial institution in possession or control of those assets for the delinquent tax debts owed by the taxpayer under certain circumstances. These are often referred to as bank withholds. This bill would simply provide a modernized and more efficient methodology to issue these notices and levies to these financial institutions. Before turning it over for questions, I wanted to very briefly summarize the provisions of the bill. Specifically, Section 1 of the bill requires the department to enter into agreements with financial institutions doing business in Nevada and which are regulated in Nevada to coordinate the development and operation of a system for matching data in order to collect tax debts. Under such agreements, the financial institutions would be required to provide the department with the name, address of record, social security number, or other taxpayer identifying information of each person that maintains an account at that financial institution as identified by the department. Thereafter, the financial institution will encumber those assets held by the institution to cover the debt and surrender them to the department. The department would would follow the same notice requirements set forth in NRS 360.510 for a notice of delinquency and demand to the financial institution to transmit assets under the bill. The department will negotiate the details with the financial institutions in executing these agreements to address issues not specified in statute. For example, issues like data and privacy protections and other retention schedules for such data. Section 1 further provides immunity from civil and criminal liability for the financial institutions for disclosures of information to the Department of Taxation under this bill, including the encumbering and surrendering of assets to the department. Section 1 of the bill also provides immunity from liability to the department if a court orders that any assets should be returned to a person. In regard to liability, the department, as opposed to the financial institutions, will enter into a contractual agreement with a software company, such as Informatics, to facilitate these asset transfers, including the determination whether the financial institution has assets of the taxpayer. The software also has automated lien and levy processing. The software vendor must comply with the requirements of IRS Publication 1075 to ensure the highest standards of security, privacy, and confidentiality, and other federal guidelines, to protect personal information. Any contracts the department enters into with outside software vendors are subject to contractual requirements for all state agencies, including the required indemnity provisions, governing law, data security breaches, required insurance, and other issues. Section 2 of the bill provides that the department may disclose what would otherwise be confidential taxpayer information to financial institutions to obtain the necessary financial records of taxpayers from those financial institutions. Specifically for reference, NRS 360.255 provides strict confidentiality provisions and restrictions against disclosure of any taxpayer data maintained by the department. There are very limited circumstances in which such data may be disclosed for limited and discrete statutory purposes. Finally, Section 3 of the bill provides that the department may request and the financial institution may provide to the department the financial records of customers in response to the requests under this bill. Again, the department must also comply with IRS Publication 1075, which governs very strict protocols for confidentiality and privacy of data maintained by the department. Moreover, the software companies must also do so if they enter into these agreements with the department. Another example, the department is aware of approximately 22 states, 7 of which are streamlined states, that have similar legislation and use this software. Recent data the department received from the state of Georgia includes that Georgia has about 300 financial institutions in the state, and its revenue agency currently has agreements with approximately 94% of them. Georgia uses the Informatics software, which does almost all of the work for the agency in these larger bank withholds. Georgia also uses the GenTax software, which is the software the department is using through Project Mint, as its integrated tax system via Fast Enterprises. So Fast Enterprises is familiar with this program, and the development would be relatively easy. Since its implementation in 2022 in Georgia, Georgia has collected $5 million from financial institution levies. They've matched over 130,000 different taxpayers. They've located funds of $2.2 billion, and they've recorded liens on file of $225,000. With that summary, Madam Chair, we'd be happy to answer any questions. Thank you.
Thank you so much. Also, I wanted to welcome our controller and deputy controller here as well. I feel bad. They've been doing a lot of sitting, so I don't know if they're going to have anything to say, but welcome to revenue. With that, we will go ahead and start with Vice Chair Considine.
Thank you, Chair. You mentioned that Georgia got $5 million, but they found $1 billion. I was just wondering if the department has any idea or estimate about the amount of debts that we might be able to obtain using this, like for Nevada, the potential debt that might be collected here.
Thank you, Madam Chair. For the record, Yvonne Navarez-Goodson, Chief Deputy at the Department of Taxation. I don't have that information. I would defer to our Deputy and Tax Program Supervisor in the South if they might have that data, and otherwise we could follow up with the committee about it.
Okay. And then-
Madam Chair and members of the committee, Guy Schollers, Deputy Executive Director for the department. Last name is Childers. It's not just Georgia that we looked into. When we're talking about the funds, the $2.2 billion, that is the funds that they were able to look at. It's not the funds that they captured. I also know that other states like Wisconsin, Indiana, forgot the other ones, but they have also had success with the same program, and they have collected more than Georgia has. And their totals last year, Wisconsin recovered approximately $16 million. Indiana, I just got information from them that they had 140 million collected, but only 44% of that was through bank levies. So that was a significant number. So each of these states has had very good success with this program.
Thank you. So for Nevada, we don't know what that would be yet, from what I understand. But since these are bank levies and most banks are national, does this allow to obtain levies in financial institutions that are in Nevada, but the accounts are in other states?
Thank you, Vice Chair Constantine, through you, Chair Backus. Again, for the record, Yvonne Navarez-Goodson. The way the statute is currently written, it's written as those financial institutions doing business in the state of Nevada, which are regulated by the state of Nevada, which will have the mandatory obligation to contract with the Department of Taxation. Where it's not otherwise preempted by federal law, it would be permissive for the department to enter into those agreements with other financial institutions. And we likely would pursue that with those that would be willing to entertain those agreements with us that, again, are not preempted under federal law. So those institutions that might be regulated by federal law, to the extent there's any preemption, that would be the restriction.
Okay, so I have a couple questions for you. Do the financial institutions right now currently play any role in aiding the Department of Tax with collection of outstanding tax obligations?
Yes, thank you, Madam Chair. Again, for the record, Yvonne Navarez-Goodson. Yes, under existing statute, NRS 360.510, the department already has collection authority, and it currently issues what are referred to as sort of blanket withholds. And so, again, our tax program supervisor in the South could answer that more specifically, but we do have existing authority. It's just not a mandatory program that would connect with our modernization system with these mandatory agreements. There's a lot more work that's involved in those blanket withholds. We have to issue them separately for the top 5, 10 institutions, and we go from there trying to find the assets. And it's just a more cumbersome, laborsome process.
And that just kind of made me think of something else with respect to the obligations, like the situation with Georgia that you utilized as an example. Do you know if in those other states that the withholdings or the access to the outstanding debt has been like over collected, or how much of the amount that is collected through this actually has to be returned? I know there's that provision at the end to provide a means for that.
Thank you, Madam Chair. I would defer to my colleagues in the South if they have any answers to that question.
Madam Chair, Guy Childers, Deputy Director for the record. Can you repeat your question? I'm sorry. I lost it all of a sudden.
No, don't even worry about that. With respect to the states that are already implementing the software with the financial institutions, I know that there's like kind of that clawback provision of when the money has to be given back to the taxpayer. Do you know about what the percentage of that is when that occurs?
Madam Chair, again, Guy Childers for the record. I quizzed all the states on if they had issues, if there were situations where they had to give back money. They did not indicate any issues. In fact, they indicated that they had no problems with the program and or working with informatics in this case.
And then just kind of, this could be not a hypothetical, but kind of a broad question for you. Do you know how effective our current legal collection methods are in recovering owed taxes? Like, how would you see it comparatively with implementing this new methodology?
Again, Madam Chair, thank you. For the record, Yvonne Navarez-Goodson. I believe our tax program supervisor, Kathy Fay, may have some relevant feedback here.
Yes, thank you. Kathy Fay, F-E-Y, Tax Program Supervisor 3 for the department. To give you an idea, we're very successful as far as collections go, but there's still a lot of uncollected tax out there. And to give you an example, it says here that Georgia has 300 financial institutions. We probably have at least that many, but the current way that we do withholds is we only do them to banks, that have, we don't do it to the investment companies. We don't do it to all these other places because we're not privy to their knowledge. So that gives us another place to perhaps find some funds. But we anticipate, we have an example here where out of 574 withholds we had that we did in a 6-month period, we collected over $1 million on 104 accounts, on 104 bank withholds. The other 300 and some odd withholds all came back with no account found or no funds available or the accounts closed. So what this is going to help us find is those banks that, the businesses that have switched banks and haven't disclosed that to us. And just in general, being able to not send out withhold requests to banks that are not going to give us any specific money. It's time consuming for us, and it's also time consuming for the banks because we send all these blanket withholds out to all these different banks, and they all have to go into their system and look and let us know that there was no accounts found. So we have to wait for a response before we can try and find try other banks, and they have to put out these responses. And it's obviously quite a few that we get. Does that answer your question?
Yeah, I mean, I think you started doing it at first was the amount currently that was ascertained. And obviously this is not my area of expertise, so I always think about in civil actions collecting on judgments. But it seems like obviously through your guys' statutory authority have a different means of doing collections. So you did answer. It was what's going on right now. And it sounded like you were successful, even though there may have been a lot of time in doing it because you were getting a lot of responses that there are no longer any accounts at certain financial institutions, that your answer was 1 million out of the 104 banks. So with that, do members have any other questions for the Department of Taxation? Okay, with that, if you want to go ahead and sit back, we'll go ahead and take testimony in support of Assembly Bill 557. We'll start here in Carson City. Is there anyone in Carson City wishing to give testimony in support of Assembly Bill 557? With that, we'll go to Las Vegas. Is there anyone in Las Vegas wishing to give testimony in support of 557? AVH, is there anyone on the phone lines wishing to give testimony in support of Assembly Bill 557?
Chair, the public lines are open and working. We have no callers to testify in support.
Okay, then we'll move to opposition testimony, and we'll start here in Carson City. Is there anyone wishing to give testimony in opposition to Assembly Bill 557? And we can start with Mr. Walker. Go ahead.
Lucky me, ma'am. Good afternoon. Brian Wachter, Senior Vice President of the Retail Association of Nevada. Very happy to be here for what is hopefully one of your final meetings of Assembly revenue. Unfortunately, we are here in opposition to Assembly Bill 557. We believe that this precedent, even though there's a very specific limited use case in the Controller's office, is something that we don't believe we should be going down the road with in Nevada. You have heard in this legislative session multiple times the difficulty and the extenuating circumstances when it comes to debt collection. We feel some of those same standards should be applied here. For instance, if you're a small retailer and you have small margins to begin with, perhaps the money that's sitting in that bank account is meant for your payroll or to be paying your bills or to pay your rent or your utilities. Should that money be taken out without your notice very quickly from your bank account, you may be unable to make your payroll. You may be able to continue your business at all, which will put you further in an inability to pay the state back. This is a dramatic departure from how the state usually deals with extraordinary circumstances in debt collection. We normally every so often have a period of time where we allow a tax amnesty program, which usually brings those people out of the woodwork and brings those businesses back in to be as compliant and as up to date as possible. We do think that there are some due process considerations. The bill also contemplates what happens when the tax department takes money that maybe wasn't owed to them or has been adjudicated, and I think that needs to be underscored. It also says that the department is held harmless in the event of any of those adverse consequences to a business if that money was taken in a way that perhaps shouldn't have been, or as the bill contemplates, is ordered to be returned by a court. And so we think that that just kind of underscores that obviously things are going to be a little bit wrong because it's built into the bill. And we think this is an extraordinary step for very little return, and we urge you to oppose the bill.
Good afternoon, Madam Chair, members of the committee. Carrie Kramer here on behalf of NAOP, also unfortunately in opposition to this bill. This bill is a violation of due process. Deprivation of life, liberty, and property must be preceded by notice and an opportunity for hearing. This bill allows the Department of Taxation to collect debts through seizure without obtaining an order allowing them to do so, and also absolves the Department of Taxation to be absolved of any liability if they're wrong. Which is also a constitutional violation. To that end, the bill is a solution without a problem. Existing law and judicial processes allow the department to seek this information through the courts as part of a debtor's exam, once the debt has been proven in order to be paid by a court. This bill is a violation of the person's right to privacy, as the information it seeks is inherently protected. And for those reasons, we are in opposition to this bill. Thank you.
Good afternoon, Madam Chair, members of the committee. For the record, Andrew McCabe, I'm the Executive Director of the Nevada Franchise Auto Dealers Association. We too are in opposition to this bill. Quite frankly, there's some unknowns on this bill in terms of how it's going to impact us, and I think the impacts are pretty negative, and I'll briefly lay them out. Our dealers are deemed to be financial institutions pursuant to federal law under the Gramm-Leach-Bliley Act, and as part of that, we are subject to the federal safeguards rule. And in a nutshell, the safeguards rule is related strictly to data security and ensuring that our customers' information is protected. Contained in the safeguards rule are provisions that require that we protect that data and encrypt it in data in transit, and that we're on the hook that if anything goes wrong with that. Data in transit is data that is included in its movement between systems, devices, location, as well as when it's stored on a system. Our concern is if that information is transmitted, are we going to ultimately fall into a trick bag and have a violation of the federal safeguards rule? Now, Section 1, subsection 4 of the bill indicates that we're, in essence, there's immunity from it. However, I would submit that if we create a violation of the federal safeguards rule, that that immunity simply would not apply, and the penalties for violation of the federal safeguards rule are really steep. I believe right now it changes every year, but I believe it's about $57,000 per violation. And simply due to the fact that the unknowns on this and the potential ramifications of our dealers being caught up on this, we oppose it. I do want to put it on the record, Madam Chair. We greatly support the efforts of the Department of Taxation of collecting what is paid to the state, what taxpayers are responsible for paying. I just submit that this is not the proper methodology. So for that, Madam Chair, thank you for your time.
Good afternoon, Chair Backus, members of the committee. For the record, my name is Nick Schneider, Director of Government Affairs for the Vegas Chamber. We echo a lot of the concerns that you've heard so far today, and also do appreciate the efforts of the Department of Taxation. Do really want to highlight just the issues with due process, as well as just underscoring in Section 1, subsection 5, that the Department of Taxation would be held harmless for the wrongful seizure of assets is a major concern, especially because something like that would be very disruptive to business operations and would have lasting damages. This coupled as well with the potential for data leaks per the process in Section 1, subsection 3 to provide quarterly reports, and no provisions for liability in the case of a data breach, do highlight to us a lack of guardrails that gives a lot of latitude to the Department of Taxation with no accountability. It is the Chamber's opinion that passage of this bill would erode consumer confidence and hinder economic development in our state, as Nevada would be perceived as both overly aggressive in its financial enforcement, but also very clearly not open for business. We urge your opposition. Thank you.
Hello, Russell Rowe here on behalf of One Nevada Credit Union, and that is Nevada's largest state chartered credit union. Here in opposition, I would like to note at the outset, we have not had an opportunity to speak with the proponents of the bill. So do offer our apologies, just haven't had an opportunity to get with them yet. Our concern, many have already stated some of them, but largely this seems to put us in the position of tax collector on behalf of our customers, many of whom are small businesses, working families. We have programs helping families manage their finances down to the double digits. So this really is concerning where this places us vis-a-vis our customers and the impacts to them. So we do look forward to working more with the Department of Tax on this bill, and maybe there's a way to reach the intent without harming our customers. Thank you.
Thank you, Madam Chair. Alexis Motorex with the Nevada Chapter Associated General Contractors, and we share the concerns already articulated by my colleagues and are opposed to the bill. Thank you.
Thank you, Chair Backus, committee members. Misty Grimmer, GRIMMER, representing the Nevada Resort Association. We also echo the concerns expressed by the Retail Association and the Chamber and the others. Not only are we some of the state's largest taxpayers, but similar to the comments of Mr. McKay, we also, our properties are considered financial institutions. So this does also put us in the position of putting our customers' data potentially at risk, or having it similar to what Mr. Rowe said, being in the role of being the tax collector. So we also look forward to working with the department to see if there's some guardrails that can be put around the bill. But currently we're in opposition. Thank you very much.
Thank you so much. We'll go ahead to Las Vegas for testimony in opposition to Assembly Bill 557.
Good afternoon, Chair Backus and committee members. For the record, Becky Dutro, DUTRO, with Nevada Taxpayers Association. Although we recognize the potential need for additional collection tools, we have multiple questions and have not had time to thoroughly evaluate the unintended consequences this bill may create. Good tax policy should include transparency, and new provisions should not be implemented quickly without sufficient stakeholder input and guardrails in place to protect taxpayers from hardships, unintentional mistakes, or errors of the department. We also have concerns over whether this bill would create compliance issues with federal banking privacy laws, another issue that needs to be fully vetted, and also echo the sentiments of the previous. Thank you for your time and consideration.
Thank you so much. With that, AVH, do we have anyone on the phone lines wishing to give testimony in opposition to Assembly Bill 557?
Chair, we have no callers for opposition at this time.
Thank you so much. Next, we can go to neutral. Is there anyone here in Carson City wishing to give testimony in the neutral to Assembly Bill 557? We'll go ahead to Las Vegas. Is there anyone wishing to give testimony in the neutral to Assembly Bill 557? Not seeing anyone walking up to the dais. ABH, do we have anyone on the phone lines wishing to give testimony in the neutral to Assembly Bill 557?
Chair, we have no callers for neutral.
Thank you. With that, I'll go ahead and invite the bill sponsor back to the dais for closing remarks.
Thank you, Madam Chair. For the record, again, Yvonne Navarez-Goodson, Chief Deputy Executive Director with the Department of Taxation. Thank you for the opportunity to present some closing remarks. I just wanted to provide a couple of clarifications for the benefit of the committee. First off, when the concerns were raised about due process, these are going to be considered final debts of the taxpayer that have already proceeded through the entire appeal and due process efforts. So, any tax that is determined, whether through audit or any deficiency, goes through the potential for a hearing before the ALJ, a redetermination by the department, all the way up to appeal of the Nevada Tax Commission and up through judicial review. So we're not going to be issuing any levies against taxpayers that have not already gone through the entirety of due process and have been deemed a final debt of the taxpayer. I also wanted to emphasize that the department already has this statutory authority to issue these bank withholds in NRS 360.510. So this bill is really intended to provide some efficiencies in the place to do so through this modernization, through these agreements with the financial institutions. And again, there's a lot of opportunity to negotiate these agreements with the financial institutions to ensure all of the protocols are properly in place. Also, I wanted to emphasize that both the department, any software the department would utilize, we are subject to the IRS publication 1075, which is a very strict security, privacy protocol. Every department employee is fingerprinted and background checked under the requirements of this protocol. So we have very strict boundaries in place under the requirements that we comply with IRS publication 1075. Finally, I just wanted to emphasize this bill really does identically model existing law that is used to collect other state taxes. And we modeled this language specifically after existing law set forth in NRS 353C. So again, Madam Chair, I'd be happy to answer any questions you might have, but thank you for the opportunity to provide those closing remarks.
I don't think we have any other further questions. I appreciate your closing remarks. And with that, we'll go ahead and close the hearing on Assembly Bill 557. And we'll go ahead and open the hearing on Assembly Bill 594. And so we'll give you a moment to set up because I know there's a PowerPoint for this one.
Okay, thank you, Madam Chair. Again, for the record, Madam Chair, members of the committee, my name is Yvonne Navarez-Goodson, Chief Deputy Executive Director for the Department of Taxation. I have with me today Adrian Roberts-Larson, who is our Deputy Director over Administrative Services, and together we will be presenting an overview of AB 594. To begin, I'd like to defer to Deputy Director Roberts-Larson.
Good afternoon, Madam Chair. For the record, my name is Adrian Roberts-Larson, Deputy Director over Administrative Services for the Department of Taxation. As this committee is aware, the department is currently undertaking a large-scale modernization project to implement a new integrated tax system for the state of Nevada known as Project Mint, or MINT. With such modernization efforts come opportunities for the law to catch up with various modern applications, and this bill is aimed at addressing 4 specific areas that will aid in the department's modernization efforts, streamline taxpayer access and services, and ultimately save money to the state. This bill originated as a budget efficiency measure wherein the department acknowledged the opportunity the system provided for certain long-term savings in voluminous mailing cost. Since its origination and having recognized some opportunities since the system's first implementation, the department has brought forward 3 additional opportunities in this bill to support this modernization. The first modernization goal relates to authorizing electronic notices to taxpayers through the new system. Second, with the new system, the department is able to distribute revenues much earlier on a cash accounting basis. As a result, the department is requesting an earlier due date by approximately 10 days for businesses to file and pay their sales and use taxes to the department. This will ensure more timely distributions of revenues from specific filing periods. Third, the department has recognized outdated statutes when programming and configuring the new system for the upcoming implementation in December related to the NAICS categories applicable to tax rates for the commerce tax. And finally, the department seeks efficiencies in documents requiring notarization in electronic form through the new system and cooperation with county recorders to ensure that such documents submitted for recordation, such as liens on real property and lien releases, are accepted from electronically notarized documents. The department's new tax system has the capability of communicating directly with taxpayers through their accounts in the system. You might liken this in your personal capacity to online banking, wherein you log into your bank account and perform various financial transactions, and the bank notifies you of various activity on your account, either as messages in your account or email notifications. With this capability, the department seeks the express statutory authority to communicate with taxpayers via electronic means for any notice, decision, or other written communication that is required by law, unless the person expressly opts out of receiving such communications electronically, or unless another provision of law requires such notice, decision, or written communication to be delivered by mail or personal service. The electronic delivery of such communications is expected to result in a budgetary efficiency measure by savings in paper printing and mail delivery cost. The department's budget to the legislature included Decision Unit E233 with a savings of $22,344 in each fiscal year of the biennium for these cost savings. With regard to the opt-out provisions, the system's configuration informs taxpayers when they register for an e-services account through Mint, My Nevada Tax, that they will be automatically enrolled in electronic communications and notices unless they expressly opt out and desire to continue receiving physical mail. In the experience of our vendor, which has implemented the system in multiple other jurisdictions, the majority of taxpayers prefer for all communications and information to reside in their e-services account. Again, Section 1 of the bill provides such statutory authority for the department to deliver various communications, notices, and decisions via electronic means, with express exceptions for those taxpayers who opt out of electronic service or where other provisions of law expressly require another method of delivery. The methods of electronic delivery include delivery to the secure account of a person who has registered for an account in the department's new electronic system, delivery via email by a person who has so consented, and 3, posting of a notice, decision, or other written communication on an electronic network or internet website of the department with delivery of a separate notice of such posting to a person's email address. Notably, existing law requires deficiency determinations for payment of taxes and the suspension or revocation of certain permits to be served by personal, service, or mail. Therefore, such communications may not be served electronically under this bill. I would now like to turn the presentation back over to Chief Deputy Navarez-Goodson to present the remaining provisions of the bill.
Thank you again, Madam Chair. For the record, Yvonne Navarez-Goodson, Chief Deputy Executive Director with the Department of Taxation. As mentioned, I would like to present an overview of the remaining 3 modernization tools that are set forth in this bill. First, the bill deals with the NAICS code categories and codes applicable to businesses subject to the commerce tax, which are those entities with Nevada gross revenue exceeding $4 million in a taxable year. Specifically, the tax rate for the industry in which the business operates is based upon the NAICS category assigned to the industry. In configuring the commerce tax into the department's new tax system for the next implementation in December 2025, the department recognized that existing statutes refer to the applicable NAICS categories from the 2012 edition of the publication issued by the Census Bureau. This publication is updated every 5 years, with the current version being the 2022 version. The department recommends for configuration purposes into the new system that the NAICS categories applicable to entities subject to commerce tax be based on the most current version of the publication. However, the bill creates an exception for any changes to a business's NAICS category that would result from the updated NAICS publication, including a rate change without express statutory vetting and change by the Nevada Legislature. Accordingly, the bill requires the department to review each new publication every 5 years to determine whether any industry categories would result in a change and inform the Nevada Legislature for possible consideration of statutory changes in future legislative sessions. Notably, between the 2012 version of NAICS set forth in existing statutes to the current 2022 version of NAICS, there has been a change to the identified categories for publishing, software, and data processing business category, which includes business entities primarily engaged in motion picture and sound recording, publishing, except on the internet, of newspapers, magazines, periodicals, and books and software, broadcasting, except on the internet, such as creating content or rights to distribute content, and finally, data processing, hosting, and related services. These changed categories are identified in the bill in Section 5. This section would only be applicable to taxable periods after July 1st, 2025. Next, the department seeks to revise the due date for remitting sales and use tax to the department. Under current law, such sales and use taxes must be remitted not later than the last day of the month following the month the tax was due. For example, if a business entity collects sales tax in the month of May, it is due to be paid to the department no later than the last day of June. This bill would revise that due date to the 20th day after the month the tax was imposed, or in our example, by June 20th. Again, the purpose of this change is to accommodate the modernization of the department's reporting and distribution of revenues. The department is able to distribute revenue much more efficiently in the new system on a cash accounting basis. If sales and use taxes are reported before the end of a month, the distribution at the end of that month can include those payments from the prior filing period. This change would only be applicable again to taxable periods after July 1st, 2025. The department consulted with the Nevada Retailers Association and the Nevada Taxpayers Association for feedback regarding this proposed change. Based on most feedback the department received, industry understands the reasoning and benefits behind this change to accommodate the new reporting and distributions. In fact, taxpayers who file in multiple states are subject to this earlier due date in other jurisdictions and will be readily able to accommodate this change. Nevertheless, to ensure a seamless transition, the department will educate and encourage taxpayers to comply with this new date immediately upon its effective date. However, the department will implement a 3-month grace period until September 30th, 2025, wherein it will waive any applicable penalties or interest for those taxpayers who pay after the 20th of the month, but again, who still pay on time before the end of the month to encourage compliance with, and acknowledge this change. Finally, the department seeks to establish statutory provisions to allow staff who are notaries to electronically notarize documents and require such documents to be accepted by county recorders for recordation. The department's new system enables certain securely authorized employees who are notaries to attach electronic signatures and stamps to notarized documents through the system. And due to the inherent security protocols in the system and assurances that such secure documents are being transmitted by the Department of Taxation, the department seeks to require county recorders to accept such documents without requiring the expense or additional requirements of becoming e-notaries. With the implementation of the new Mint system, the department staff, which are notaries, are attaching electronic signatures on the documents requiring notarization, and these documents are then printed with the electronic image of the signature and mailed to recorders for recordation. Such documents include liens on real property for delinquent taxes, fees, penalties, and interest, and releases of such liens on real property. To accommodate the modern approach to preparing such documents for notarization, this bill seeks to remedy any issues or concerns that recorders may have in accepting these forms of documents for recordation. Specifically, Section 8 of the bill provides the manner in which electronic documents within the new tax system may be electronically notarized by department staff who are already notaries with the Secretary of State. Such staff would be authorized to electronically notarize certain electronic documents without becoming registered specifically as electronic notaries public with the Secretary of State, which is both costly to the state and the department and requires a $10,000 security bond in addition to extra process and procedure. The department will continue to print a paper copy of the electronic document containing an image of the electronic signature and notarization for recordation with the county recorders. Because not all county recorders are currently set up to receive documents electronically from our system, this is why the department would continue to print those paper copies and send them in. Finally, just to reiterate, Section 14 of the bill ensures that the provisions of the bill affecting the NAICS category changes and the revised due dates to sales and use tax are only applicable to the tax years commencing on or after July 1st, 2025. And again, thank you, Madam Chair, for indulging us in that presentation. We're happy to answer any questions you may have.
Thank you so much for your presentation. We do have some questions for you. We'll start with Assembly Member Golding.
Thank you. On slide 4, you mentioned that you're going to update the categories, the NAIC categories, every 5 years. And the examples you gave were all in industries that are in rapid change right now. How did you come up with 5 years?
Thank you again, through you, Madam Chair, to Assemblymember Golding, Yvonne Navarez-Goodson for the record. The 5 years wasn't a time frame that the department came up with. The 5 years is done by the Census Bureau. So every 5 years, the Census Bureau issues a revised publication of the NAICS categories. And so the bill would have the department, upon any new publication issued by the Census Bureau, reviewing that publication to determine whether any categories have been changed, because that would then require a statutory change with what's currently existing in Chapter 363C. You're welcome.
I have a couple questions, and because I was looking at the Secretary of State, and some of my questions are gonna pertain to the electronic notary, just from my experience with like notarized documents. I looked on line 1, if you to be able to perform electronic notaries, you have to already maintain like your permit or license or however it is with the Secretary of State to be a notary. And according to the Secretary of State site, there's no extra bond that would be required. But my curiosity would be is how would you foresee then getting like the setup for the electronic notary? Because it sounds like that's part of the process that you may need to accomplish through the Secretary of State. So I don't know if we can just simply skirt that aspect unless you're thinking it's actual hard stamp notary documents that are scanned. I'm trying to decipher what it is that you're trying to accomplish.
Thank you, Madam Chair. Again, for the record, Yvonne Navarez-Goodson with the Department of Taxation. Maybe an example would help clarify our intent here. So what this bill is intended to do is to exempt the Department of Taxation's notaries from having to become e-notaries for purposes of certain documents that we file, including liens and lien releases. And so what happens with our new system is that an employee who is an authorized notary with the Secretary of State is able to receive a document through a task in the system and look at that document, and any staff member is able to sign those documents electronically in the system. So there's an electronic signature attached to that document, for, in this case, for example, a lien. And so then that lien that's been electronically signed by department staff needs to be notarized by a notary within the department. And so again, as another task within the system, that notary can notarize the lien with an electronic signature and stamp through the system. And so what occurs then is that there's a printed document with an electronic signature and electronic stamp for the notary. And what we're trying to do is make that process more efficient and make it so that the county recorders are comfortable accepting those liens. And so the bill is intended to basically say this electronic version of the notary and the signed document are acceptable by the county recorder without having to be, a physically signed copy and then a physically signed notary. It can be done electronically, and the county recorders would then be required to accept those versions of the documents from the Department of Taxation.
So, as I'm understanding how you're explaining this, so basically the software that the Department of Taxation is using, you could input the notaries, like what their normal stamp would be with their notary number that is issued by the Secretary of State. So you're almost creating the stamp for that notary. Is that what I'm understanding?
Again, Yvonne Navarez-Goodson, for the record. Thank you, Madam Chair. I don't want to say that firmly. I don't know for sure if they would be creating the electronic stamp. I think they would be able to have their automatic electronic signature be included on the electronic stamp. But again, that's maybe a little bit technical for my knowledge. What I would say is that there are security protocols in place to ensure that it's not just any staff member that would be able to attach an electronic notary stamp. It has to go in the task queue to the department employee who is an authorized notary to be able to notarize these documents. So there would be no risk of staff that is not the authorized notary issuing the notarized stamp.
I mean, and I'm just like obsessed with it because it almost seems like someone's like tasking and they're passing it on. But normally when someone signs a document such as like a lien, you're doing that in front of the notary because you're attesting to what that person's signing. But to me, it almost seems like someone could sign the forms and then later on someone is like, oh, I have a task, I have to do the notary. It doesn't seem like it would be the normal like notary process that I think everyone's used to and what the purpose of having a notary does.
Thank you, Madam Chair. For the record, Yvonne Navarez-Goodson. The language of this bill actually does still require that notary be done in the presence, or that signature be done in the presence of the notary. So in our case, it will be simple in that we have notaries in each of our district offices, and most of our staff know one another, so there would be no risk that the notary being willing to sign and attest that the person who signed it is there present in that district office and can attest that it's that person who signed that document.
And then my next question is, I know you talked about the 3-month hold harmless period. Wouldn't it be just easier to start the implementation date later to allow those to become in compliance with the new mandates instead of doing this 3-month and then have people like potentially be on the hook if they didn't know they had to get in by the 20th day and they pay by the 30th and then later on their interest is waived. I just didn't know if that would be more efficient.
Thank you, Madam Chair. Again, for the record, Yvonne Navarez-Goodson. We did consider that as an issue, but due to the reporting cycle and making sure that we have distributions reporting as early as possible because so many taxpayers will be able to immediately comply with that new due date, we wanted to start that at the beginning of the fiscal year, which is why we put the July 1st, 2025 date in there, acknowledging that we will have to do a pretty robust communication campaign with our taxpayers to let them know that this change is coming. And that's why we were willing to do the grace period of that 3 months to allow time for that communication period to go in. But the sooner we can get taxpayers reporting on this cycle would be more beneficial for revenue reporting and for forecasting.
And my last question, I swear, will Mint be able to be up and ready to be able to accomplish this as soon as July 20th?
Yes, again, thank you for the record, Yvonne Navarez-Goodson. Yes, we will be ready to accommodate that immediately.
I appreciate that. Members, does anyone else have any other questions for Department of Taxation? Okay, well, thank you for your presentation. We'll go ahead and open the hearing at this time to take testimony in support of Assembly Bill 557. We'll do that here in Carson City. So those wishing to give testimony in support of AB 557, please make your way to the front. Not seeing anyone, I'll go to Las Vegas. Is there anyone in Las Vegas wishing to give testimony in support of Assembly Bill 557? AVH, is there anyone on the phone lines wishing to give testimony in support of Assembly Bill 557?
Chair, the lines are open and working. We have no callers to testify in support.
Thank you. We'll move on to testimony in opposition of Assembly Bill 557. We'll go ahead and start here in Carson City. Please make your way to the dais.
Good afternoon, Assembly members, committee members. My name is Shawneen Guerin. I am the Douglas County Recorder, and I am here today speaking in opposition of this bill on behalf of the Recorders Association for the following reasons. NRS 247.115 currently authorizes recorders to accept electronic documents for recording. NRS 247.117, which was just passed in 2021, provides a method of papering out that provides for consistent and equal application of the law regardless of who is submitting the document for recording. For clarity, papering out refers to a statutory process of converting an executed and notarized electronic document in tangible paper form, for submission to record by traditional recording procedures. This process is consistent with best practices established through the Property Records Industry Association, a national association that exists to establish and support standards and best practices within our industry with careful consideration of each of the stakeholders in the process. Additionally, NRS 240.19902 provides notarial language sufficient for certifying a paper document as a true and correct copy of an electronic document that needs to be recorded in hard copy form for any variety of reasons. Currently, all 17 counties across the state, county recorders' offices, I should clarify, across the state, have one or more approved electronic recording partner that allows for secure submission of documents to be recorded. In its current form, AB 594 would create inequities in how documents are accepted and processed. As such, the Recorders Association of Nevada is opposed to AB 594 as it pertains specifically to Section 12. We respectfully request the deletion of Section 12 and to have the established papering out process be followed if hard copy recording is required or desired, until such time that the most efficient and cost-effective government-to-government electronic recording submission process can be established. Once established, this solution can also be made available for other state agencies who submit documents for recording to utilize regardless of whether those documents are executed and notarized electronically or in traditional wet ink format. I think it's also important to note that, as stated, all 17 counties already have electronic submission capabilities, and so we would be able to accept those as soon as the department decides to go forward, and we're happy to work with them on that. The specification of government to government, as opposed to business to government, which is traditionally who we see, might be a matter of adjustment of fees. So we would work with our partners and see if we can get a reduced cost for that submission so that you're not just exchanging mailing cost for submission cost.
And before you step back, I just
Yes.
had a question of clarity because you mentioned a section that should be stricken and you said Section 12. However, the bill only has 4 sections, and then I even looked for subsections and I didn't see a Section 12. So if you can kind of point me into specifically what the language was that you were commenting on. I didn't know if it was, yeah. Never mind, please disregard.
That's okay. And I realize it's contrary to standard practice, but if there are any questions that the committee members have with regard to the established practice and how e-recording works, I'm certainly happy to answer those.
We appreciate that. Go ahead, Ms. Kramer.
Thank you, Chair Backus, committee members. Misty Grimmer, GRIMMER, representing the Nevada Resort Association. So there's only one section of the bill that we have a concern with. Otherwise, we're definitely looking forward to the modernization system that the department is rolling out. And that section is about the reporting, the implementation date of the change to submitting taxes on the 20th as opposed to the end of the month. That is going to require a significant IT change essentially for several of our properties. And while we do appreciate the grace period that's being offered, we, similar to the chair's question, we also would request that maybe that portion of the bill could have a later implementation date so that we have some time to change our internal systems. And I was going to leave my name and information with the proponents so that we can continue that discussion further on both of the bills.
Thank you so much. With that, we can move to Las Vegas. Is there anyone in Las Vegas wishing to give testimony in opposition to Assembly Bill 594? AVH, is there anyone on the phone line wishing to give testimony in opposition to Assembly Bill 594?
Chair, we have no callers in opposition at this time.
Thank you so much. With that, we can move to testimony in the neutral. We're accepting testimony in the neutral here in Carson City first, and then we'll go to Las Vegas.
Good afternoon, ma'am. Brian Wachter, Senior Vice President of the Retail Association of Nevada. We are neutral. We understand the intent here. We did want to put on the record, and I think it was mentioned by the NRA and also yourself, Madam Chair, that there is going to be kind of an adjustment period. We don't see the 3-month grace period built into there. That might be something that tax can do on their own, but we would appreciate if there was something in here on this. In regards to Section 4, our question for the committee would be if that's changed, that we're going from the 2012 to the updated version, if that results in additional revenue to the state, we need to make sure that that is fulfilling all of its constitutional requirements in the bill, just because we haven't been able to kind of take a look at what those different changes are going to be. I may misunderstand this at the late hour, that we are contemplating an additional conversation with the legislature at a different date in order to do that, but the way we read it is we are adopting a new addition here and then giving the option for the legislature to continue to do that or must do that in the future. And so we want to make sure that we understand fully what those tax consequences are going to be should businesses be reorganized or reclassified into the system currently. And with that, ma'am, we do appreciate the tax department having reached out. We had very fruitful conversations. We want to be a part of this solution, and we look forward to seeing the bill progress.
Thank you so much. Is there, we'll go ahead and with your neutral testimony. Ms. Dudrow, go ahead.
Sorry, I thought you had someone up there still. Good afternoon, Chair, committee members. For the record, Becky Dutro, D-U-T-R-O, Nevada Taxpayers Association. The association is neutral on this bill, and we thank the department for the continued dialogue with the association. We do want to point out the good tax policy should be simple and easy to understand, as well as transparent and visible. Regarding sections 4, 5, and 13, we support the change in the language to reference the most recent addition of NAICS categories and have been assured by the department that this change will not negatively affect any current taxpayers. Regarding sections 6 and 7 and the change of the due date for sales and use tax, we have the same concerns about the July 1st, 2025 effective date, as this is a very short amount of time for taxpayers to receive communications detailing the change, as well as make any financial system or accounting cycle changes. While most large businesses may be able to quickly make this change, we are concerned that smaller businesses who rely on manual systems or outside bookkeeping or accounting companies may not be able to make the necessary changes as quickly. We have discussed these concerns with the department and are hopeful that they will work with taxpayers and make reasonable exceptions past the first quarter for those whom do not receive sufficient notification or are unable to make the necessary changes to their accounting systems or cycles in this short amount of time. Additionally, if this change is approved, there will need to be an evaluation of all taxes to ensure that there is consistency in the administration to alleviate any confusion the taxpayer may have regarding due dates or differing due dates. For example, GOED's SB 461 being heard in the Senate side today still references due dates of the last day of the month, obviously since this change hasn't been effectuated yet. So any new legislation, as well as existing NRS, will need to be reviewed for consistency and change in a very short period of time. Again, we thank the department for their continued dialogue, and we thank the committee for your time and consideration.
Thank you so much. With that, we'll go to AVH. AVH, is there anyone on the phone lines wishing to give testimony in the neutral to Assembly Bill 594?
Chair, we have no callers for neutral.
Thank you so much. And with this, I'll go ahead and invite Department of Tax up for some closing remarks. And if I can have you include in your closing remarks, I know a lot of these were budget implementation bills. If you can touch on how the policy is important for some requested changes that you may had, because there's a lot of stuff going on in this bill. And so I wasn't sure exactly what it is that you may need out of the bill.
Thank you, Madam Chair. Again, for the record, Yvonne Navarez-Goodson, Chief Deputy Executive Director with the Department of Taxation. To your last question, I would say that the specific budget request here relates to the electronic written communications, and that was an efficiency measure that the department included within its budget of the approximately 23,000 per fiscal year. So that really was an efficiency measure that the department believed it would gain right off the bat with the authorization to do these electronic notices when there was not an opt-out or a statute that otherwise required. So that was the only budget piece. The other, not part of our budget, but the other issue that we were addressing with our updated reporting and distribution structure was the reason behind the sales and use tax due date being changed so that we could align better our distributions more efficiently with the filing periods at issue. Because when we switched from a cash accounting, from an accrual accounting basis to a cash accounting basis, what resulted is that certain filing periods were then distributed over 2 periods. We believe that with this change, those distributions can occur within the same revenue period. So we think that that is a great outcome for the department in terms of its ability to forecast for the economic forum and so forth. And those were really the only 2 ties that this bill had. What came into this bill after the efficiency measure were the NAICS code provisions as well as the provisions for the electronic notaries. Those 2, we don't have a specific budget tied to those particular provisions.
I appreciate that. And if you wanted to make any other closing remarks, because I know you've heard some other comments made on the record.
You bet. Thank you, Madam Chair. Again, for the record, Yvonne Navarez-Goodson. One thing I would say about the NAICS code change, this bill in its current version does not result in any rate changes to any taxes. The reason that it is written the way it is, which is that we come back to the legislature, is that there is the potential that if the Census Bureau changes an industry category or code, it could result in a rate change to a particular business entity, and that would then, I think what my colleague referred to as a potential constitutional change in a future bill, could require a 2/3 vote out of the legislature for a rate change that increases revenue. And so that is why we have that provision in the bill to come back to the legislature when we identify changes in any updated publication that could result in a rate change to any business category. And then it would be up to the legislature to decide whether it would make that rate change applicable to that business going forward. If not, then the existing category and code for that business would remain in effect going forward until the legislature chose to change it. So I just wanted to put that on the record. And then finally, we'll be happy to work with our county recorders on this issue. The entire goal of this legislation was to ensure that our notaries did not have to become e-notaries in order to electronically notarize these documents, and also to get some consistency amongst the county recorders, because what we were experiencing when we were issuing these liens out of the new system was that certain county recorders were refusing to accept them and others were. And so we thought by doing this approach, we could gain some consistency to that. But I'll be happy to work with my colleagues in the counties and ensure that we're aligned on that issue.
Thank you for that and your closing remarks. I know we're coming to the intercession, so I may reach out to you after this to figure out what we're going to do, because I think there needs to be a little cleanup. And so that with that, I'll go ahead and close the hearing on Assembly Bill 594. And that is the last item not fully on our agenda. The next item on our agenda is going to be public comment. So at this time, I'll go ahead and open the hearing for public comment. Is there anyone in Carson City wishing to give public comment this afternoon? In Las Vegas, is there anyone wishing to give public comment? I don't see anyone making their way up, so we'll go to the phone lines. ABH, is there anyone on the phone lines wishing to give public comment this afternoon?
Chair, the lines are open and working. We have no callers to give public comment at this time.
Thank you so much. And with that, that concludes our hearing this afternoon.